Hey, good morning. Welcome to today's Forex trading strategy session. My name is Wayne McDonald, Chief Market Strategist for TradersWay.com. Here to go through some technical analysis for the major currencies, dollars and yens. Today is Wednesday, February 4th, 2015. Do these sessions every day. Welcome to join TradersWay.com. Boom. Okay, lots of requests here. Dollar, lots of dollars like euro dollar, pound dollar, Aussie dollar, fine. Some yens. Hey, let's get her done. Requests for commodities. People want to talk about oil now, but they don't want to talk about gold. Whale oil beef. All right, so this is, get rid of that. Is that, oh, it's a different, too many charts open. All right, there we go. So, this is the pound yen 4-hour chart. The yens at the end of 2014 got strong, which we already had planned. That was very, very predictable. Talked about it several weeks in advance before it happened. And so since the beginning of the year, yen strengthened, fine. So we're measuring this trend, right? We were in the channel, busted out on a higher fractal, right? This is the higher fractal. It did its move, okay? Now we're in here, leveled out around the $1.75, consolidated. And if we are reversing, if this is a change of trend, what we need to see now is for a price to stretch itself, retrace what used to be resistance is now support, up. Okay? So far, so good? I don't think we would be on the free and clear plan. I think there's a lot of market participants that are just not ready for that. So you also have to respect this zone. Okay? So there's multiple time frames going on. So we got to plan that out. So let's say up to the 200. You notice there's a top here and some congestion, probably around the 180 area. Retest. What used to be resistance is now support. Up into what used to be support is now resistance. Okay? And if you're a bull, you think it would come down, reset, break, retest, up to about this area. Takes a long time to turn the ship around. Does Forex tend to reverse in a V shape? I mean, the longer term charts? Hey, maybe on a 1-minute chart. No. So we go through a life cycle of bearishness, consolidation, bullishness, right? And in my book, I describe how Forex reverses. So that way you don't have sort of panic that, oh my gosh, it's reversing, I'm going to miss. Don't worry about it. So Forex reverses like an old man easing into a hot bath. You got plenty of time to let it reverse. What if it's not reversing? There's a huge possibility it's not reversing because we're still technically in a downtrend. I don't see a higher high. So therefore, if you're a bear, okay, you got the lower high, lower low, right? Lower high, lower low. That's all it is, my friend. So all you have to do is decide what you are. Are you a bull or a bear? And one of these things is likely to work. Maybe even both of them for a little while, right? That's the 4 hour. So you look at that and you pay attention to price action now on a smaller time. Should you pay attention to where the 200 EMA is on the 4 hour? Yeah. Now, I generally see the 200 EMA as a target, not an entry point. Okay, so I don't necessarily say this. Okay, it can happen, but it's not necessarily true that you look to sell off that 200 EMA. Now, on some of the other EMAs, that is what I plan to do. With the 200 EMA, it's not the case. It's different. It's not a dynamic level of support and resistance like these moving averages. Okay, remember, their dynamic level of support and resistance because the 2155 to me represent together the marketplace, whether the market is bearish or whether the market is bearish aggressively or conservatively bearish, whether it's falling quickly, falling slowly, falling even. A market that is slowing down might still technically be bearish, but might be less bearish, and therefore I should be more conservative. Okay? But what happens when the market breaks down? And it's just price action. Okay? Well, then something else is going on. And the 200 EMA isn't necessarily an entry point, it's a target. The reason it's a target is it represents not support or resistance, but fair market value, the equilibrium point in the marketplace. Now in here, okay, you can see it looks like support, doesn't it? Here it looks like support. Well, I'll tell you what, if it rolled over, it might have been resistance here, but I think that's just a coincidence of what's going on, because really it's just the same zone repeated. It's just price action, support and resistance, not necessarily the moving average support and resistance. Okay, it just kind of looks that way. So once we get to the 200 EMA, I don't actually know if I'm a bull or a bear. I'm actually neutral. And I'm waiting for one of the teams to take over and take charge. Does that make sense? So what makes me bullish would be more like this, okay? We're up here, we have a higher high on the small time frame, but we don't have a higher high on this larger time frame, do we? The price could rise all the way up to this gray zone and then have no problem falling. Okay? Market's still bearish. So to become bullish, we need a lot go on here, don't we? Okay? I might technically start being a bull more like in here on the high time frame. On the smaller time frames, I might contribute to the upside action, but you need to be careful that you're not aggressively bullish when we're still technically bearish. So think about it this way. What are on a high time frame, let's say daily chart now, okay? What is a market participant looking at? Okay, lower low, lower high. So what do you think they would expect to happen next? Someone looking at a daily chart. This is a 4 hour. Someone looking at a daily, what do you think they would expect to happen next? Lower low. Then what? They might not see this consolidation. Might just be a couple of dead candles. Who cares, right? And then it comes up here. What do you think a bear would do on a daily chart. Do you think they would buy it there? We know an amateur would buy it, right? Oh, well, I waited for 22 candles in a row and then I bought at resistance. That's what amateurs do, right? Slow as molasses on a cold Georgia morning. So we know a bear would sell that. But what if it heads up here? Cause for concern to a bear, right? And that's why I think that's where technically I might start considering being technically a bull. Now, all along the way, I can jam some trades long and move my stop to break even and hope, okay? And it might, because we could say, well, fundamentally you believe pound yen is going to go up. And then you throw down your argument. Quantitative easing in Japan. Carney said something at a speech about the bank at the Bank of England. That's your alpha. That's your decision. You're making it. So you've been buying the dips here on the smaller time frames, waiting for the larger time frames to give a technical reversal. But you're already in and enjoying the change in trend. Good. Okay, fine. I'm all for that. Make a decision, make it happen. Manage the risk appropriately, right? So do you think that this on, let's say, an hourly chart would be important if we broke above? And I would say, yeah. We don't know if it's going to head up. We don't know if it's going to go to the gray zone. It might just do one of these things, right? Or use that level of support, in which case maybe then at 1, 2, 3s. Triple bottom, higher high, higher low, then up. Cool. Well, that's what a trade plan is, isn't it? What about the pound yen's ugly cousin, the euro yen? What do you think of this price session? This is an hourly chart now. Look at the oscillator. That's support, roll reversal with a kicker. What do you stink? It's euro though, isn't it? Does that eat away at you? Like you look at that and you think, man, I'd like to buy that. But okay, that's not a J-Lo, but that's still a big but. But it's euro. Okay? Could be interesting in here, right? Okay, if you were a bear, it was supposed to fall, right? Right? If you were a bear, what did you do? You might have sold it here or here, right? And then maybe tried a third time. And then maybe even tried a fourth time. And then it's actually made a higher high. When do you start giving up? Well, that's the million-dollar question, right? When do market participants give up and allow this thing to head to the next level? Right? I'm not ready to drink that Kool-Aid at all. So what's going on in the marketplace? What might be happening to produce these failure of trend. I don't want to call them reversals yet, because technically none of them are reversed yet on the 4-hour and daily charts. Okay, so what's going on in the marketplace to produce said situations? Like euro dollar's up, pound dollar's been up. You know, what's going on? Why is the dollar weak? Right. I mean, we've discussed it already at least a couple of times. Not today, but yesterday and the day before. Yeah. Thank you, YJ. The event risk is non-farm payrolls at the end of the week. So long-term institutional investors that are sitting on a lot of profit from being short Euro USD have to ask themselves, if they were going to lose money, what day are they going to likely lose money? And hey, the most important thing going on right now with the US dollar is non-farm payrolls. Now, it's not the most important thing in the world these days, but it's a time when we can learn about what the central bank is thinking, sort of. We know what they want. Now we'll be able to figure out if they're going to get it, right? So it's definitely an event risk. So it's a time and opportunity for large risk-averse institutional investors to rebalance their portfolio. Cash in on some profitable trades, which you know, obviously they were short Euro USD, right? So they take some profit. This flutter back, this comes back for a few days. Remember, you're watching a 15-minute chart. The institutional investor is using a weekly chart and a daily chart. And they're like, oh, you use a daily chart? What are you, a scalper? Right? So what does that make you? So to them, they don't even see the noise that you trade. They don't say, really, euro's strong right now versus the dollar? They don't even see it, because they're looking at that. So whatever. So they book some profit. And then on Monday, they're going to sit down with their strategy team and say, hey, what do you think about non-farm payrolls? Woo. Yeah. Any changes, a Fed watcher, any changes at the Fed? Negative. Continue mission. What about you guys? How about you guys? How about you guys? No, everything's the same. Everything's fine. Everything's on track. All right. So short Euro USD? Yup. Okay. And then Tuesday, Wednesday, Thursday, boom, 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 boom. Trades come back, continue mission, and off we go. So you got to be able to look at the calendar and go through these things like you're an institutional investor. Where's the event risk? Right? Zeal says, so, they sitting out news? No. They're making trades based on long-term fundamental macroeconomics. They're not using a 15-minute chart. It's not that they sit out. Let's say ADP comes out today. ADP is a great scalping opportunity. You could probably make 30 pips in the snap of the fingers if you get it right. Fine, whatever, okay? Now these investors, they're trading a trend created by a series of economic data and their interpretation of the Fed's response to said trend. So they're not trading the news, or they're not sitting out the news. There's a risk on Friday that something unexpected happens, and if it goes against their heavily positioned portfolio, if they're aggressively net short, then what if suddenly the euro gets wrong for a week or two? Well, it costs money. So they're just going to book some profits and sell it next week. Okay? My point here is a lot of retail traders, they don't even think that way. They're just like, where's the trade? Where's the trade? Where's the trade? Like a puppy chasing its tail, right? Where's the trade? Where's the trade? There. Where's the trade? There's another trade. Long, short, 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 long, 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 short, 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 long, 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 long. Just all over the place, complete mess. So you should be able to say, well, non-farm payrolls is really important. Some of these markets have been trending very long. We review the commitment of traders report here at Traders Way every Monday morning, 7:30 in the morning. We go through the commitment of traders report. We know when the markets are heavily net short or heavily net long. It's just an opportunity to rebalance the portfolio because of obvious risk in the near future. Once the risk event has passed, if there's no significant change, because the event was so dramatic, right? If the event is so dramatic that it's going to force the Fed to make a change, then they're going to have to rebalance their portfolio some more. If nothing has happened, then it's just game on. Keep doing what you were doing before. Okay? So it's not that they're sitting out news. One non-farm payroll shouldn't be that important, but it might be. So it's just an opportunity to take some profit and then reevaluate. See, they don't have a $5,000 account. They have a $500 billion account. Okay? So they're just going to wait it out. That's all. Let the news come out, analyze it, make any adjustments, continue mission. Okay? So, yeah, I think they're thinning the euro short trades. Now, do I expect to be shorting euro USD next week? Yep. The week after that? Yep. Week after that? Yep. Non-farm payrolls week? Whoa, whoa, whoa. Throttle back a little bit. Okay? Trim the flaps. You should be able to think about the other market participants and see what's important to them. That's why I was doing some fractal geometry earlier here, because we have the same price and time data on every chart, whether it's a 1 minute, a 15-minute, an hour, 4-hour, daily, weekly. Time and price is always the same. You're just adjusting your point of view, right? Think of it as like theory of relativity. It's bullish or bearish depending on what point in the price time continuum you're observing the euro USD. Someone looking at this chart might make different decisions than someone looking at that chart, yet price and time are exactly the same. It's right now and it's the same price. The only thing that changes is the observable. So it's relative to your observation. So anyways, this might be interesting at least on the short term, but in the long term, I don't necessarily want to buy euro, but maybe we buy it today. Short-term long to long-term short? Or how about this? How about long-term neutral? Wouldn't it be nice if the Japanese yen got weak and the USD yen went up and up and up and up and up? And at the same time, euro yen doesn't do anything, but euro dollar goes down, 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 down. Okay? That's more what I'm thinking about. Or if you wanted to sell euro yen, okay, look at this. There might be some short-term up, but wouldn't you agree that this monthly central pivot point looks like it could be resistance in the future? Zoom in here. What about the 21 EMA? Isn't that our dynamic level of resistance in which we should consider selling in a downtrend right there? Okay. And how about pivot point theory? Isn't this red zone the predicted top for the week? What about price action? Isn't this a roll reversal sell zone? Okay. So maybe you're buying it this week, selling it next week, and the week after, and the week after that. Maybe. So plan it out, right? You can be bullish on a 15-minute chart or an hourly chart, but be bearish on a daily chart. That's excuse me. That's where I say, you know, short-term long to long-term short. Or this thing just starts moving sideways for the next 6 months and doesn't move up until the third week of August. Okay. So my analysis of the global macroeconomics and central banking policy says that this thing might actually go neutral. Okay, let's do some Aussie. Now, this one was funny because I was talking to somebody before the event happened. I was mentoring him as a trader, and this whole thing collapsed. But we were talking about it here. And I said, you know what's funny? Just over the last couple of years, the Aussie and Kiwi currencies, when they react dramatically to a news, for some reason they do 100% reversal. And I know it because very often I'm selling here the next day or after the fact, right? I would on any other currency, and this time just wasn't interested. It's very interesting how it actually did it. So I didn't predict it would do this, you know, drop 100 pips and then come back up 150, right? Didn't predict it. I just said it's happened frequently, and in the last couple of years, it seems to happen a lot. Well, son of a gun. Son of a gun. It did it again. Just amazing. But if you were doing, you know, your traditional scalping techniques, your second wave kind of thing, you'd be selling kind of in here. And that failed, eh, Brew? Just amazing. Just amazing that it does that. Oh, well. So let me adjust this. Just amazing. Okay. I see a little bit of divergence here. What do you think? Do you know what that means? It means the bulls that bought down here to drive price all the way up, they've been getting out of their long positions. Nobody's shorting yet. But the guys and gals that were aggressively buying, they're taking profit and exiting. No shorting yet. So there's just less bulls. Okay. So in a daily chart now, okay, so the bigger plan may prevail, where this just drops up to the 382 Fibonacci retracement and down again. I need to be careful here because we know what we've been talking about now for about 3 months is that this sucker's dropping down to 75. We're pretty close to 75. Right? Came down to 76. Could it potentially do, you know, that? Yeah, dude. Yeah. So just be careful. Another way of saying it is when we were at 85 and then at 84 and then 83 and 82 and 81 and then 80, then a break of 80 down to 79, then a retracement back to 80, which was only, what, a week and a half ago? I kept saying it's going to fall to 75. Well, now we're at 76 and you want to sell it? I think it's time to be, concerned that the vast majority of the move has taken place. So I'm not saying it's going to reverse, but it's, I think it's much more likely now that we've, some people are just going to say, hey, we hit 75, there's no more downside, get out of the shorts, go long. Because now all they have to do is defend a 100 pip range, which for most larger investors is nothing. 100, 200 pip stop is nothing for a larger institutional investor. Remember, they're not using the leverage that you're using, right? Not as much. So that's nothing for them. So they're like, man, everybody knows it's going to 75. We dropped it down to 75. We're at 76. I think I'll go long, defend it by a 200 pip stop, and this is going to go back and retest 80. Just simply wiping out all the retail traders. And then once it's up at 82 and all the retail traders want to go long, they'll sell it. And you'll say, oh, what are they doing? They're manipulating the market. No, the retail traders, because they're uneducated and they don't have the support that you do here at Traders Way, they're doing everything unbelievably late, right? That's the issue. So that's why I'm here. I want to take care of you. You're my sweet baby. I love you, man. All right, so let's move away from the trader psychology talks. Let's just bust through a bunch of analysis. MoveOn.com. Okay. Let's see. Bust this out to an eye chart. Where are we in the move? Seems like let me drew that. Seems like an area of opportunity for a bear. Let me get rid of some of this. Okay. Make sense? If it goes higher than that, I'm going to have my concerns. So I might short here and then go neutral. Why? Non-farm payrolls. Right? Take a shot, jam a stop, take a walk, let it happen. If it doesn't happen, regroup the next day or in this next week. Let's move on to, well, I guess we got to do Kiwi. Okay, Asia session was fantastic trading yesterday. Did you guys trade it? Fantastic trading in Asia. So we have the drop because of the Aussie, and then obviously Australia dropped interest rates to a new all-time low, and then New Zealand, the Bank of New Zealand, the RBNZ came out and said we're not going to do anything to our interest rates. Game on, right? So that's a 15-minute chart yesterday. Just look at some of these moves. It's just fantastic, right? It dropped, what, 200 pips, right? And then we're way up here. So let's say it dropped 100 pips, then went up 200 pips, then came down 100 pips, and then went up 100 pips, right? 100, 200, 100, 100. Hey, that's not a bad day of trading, isn't it? That's 500 pip move in 24 hours. Lovely, Julium. Okay? The first part of this could have been very uncomfortable for you. I think if you went up here and then shorted here or here, not a bad trade at all. I understand why you did it. It makes a ton of sense. Don't worry about it. Sometimes it happens. Can't win them all. As long as you didn't throw down a huge trade, then it won't hurt. On the long run, the trend will be your friend, right? But at some point, you got to get on the clue train that something else has happened, right? Then what? Makes a new higher high. Oops, didn't mean to do that. At some point, it makes a higher high, right? What have I taught you to do once you make a higher high relative to the previous high? WWWD. What would Wayne do? Yeah, you take a fib from, right? You fib it, and you also pay attention to where the previous high was, because in the future, it might be, right, the new low. It's called a role reversal. What used to be resistance is now support. It used to be a high, that's resistance. So in the future, it possibly could be a low. And that's really what happened here. And I think the death zone, right, is I think if you were a skilled, disciplined, focused trend trader, that you would have shorted. Probably, hang on, I want my marker to be red and it keeps giving me pink. And I won't stand for it. It's not pink, it's magenta. All right, anyways, that's the death zone there because I think you could have shorted there and it would have been painful. But at some point, you've got to get on the clue train. Do you want to sell a 786? Less ideal. Okay. 100% retracement? Probably not. But once it's made this higher high, wee, then you look to buy the retracement. Okay. That's all it is, guys. It dropped on the news. Good. Reversed 200%. Hey, unthinkable, but it happened. Drop down here. That's your easy buy. Okay. And the cool thing is, that was basically Shanghai Open. Sharon says, expecting some down on the Aussie dollar and euro dollar into tomorrow. Maybe, yeah. Put together a plan. Right? Book some profits and throw down some new trades or maybe new market participants or stuff like that. Yeah. But just remember how about next month? What's the news to use here? Maybe you write this down. Next month, the Monday before non-farm payrolls, look at the strongest trends of the month. Look at commitment of traders report and find out where the large positions have been growing. We do this every Monday. And find out who has the most to lose on an event like that. And in this case, if the market is heavily loaded on the euro short, then they're the ones that could lose the most. So they book some profits. Right? So it's just an event risk. For some, event risk is an opportunity to trade. For example, right before I took the session here, there was news that two REITs that sell office equipment and supplies were considering a merger. Boom, merger arbitrage. Why do you do that? Because if they're too big, like if one for economy of scale and such, guess what? The U.S. government, a social nation now, they're going to want to stop that because of the monopoly. Okay, I don't really disagree with that, but it could happen, right? So you could use that as an event, that there's risk that the merger is denied, and if you are, you can make money on that. It's just a trade. Just like non-farm payrolls could be a trade, but it's also a risk depending on the market participants. Are insurance companies looking for, a scalping opportunity? No. Are hedge funds looking for? Yeah, hedge funds might. So they're going to look at it differently.
ADP 213,000, slight miss there for ADP, but the 10th straight month above 200,000.
Small business at 78,000, down month over month. Medium at 95,000. Large business 40,000. Construction growth of 18,000 and manufacturing growth 14,000.
Prior revised higher to 253,000 from 241,000.
All right, there's the ADP. ADP can be a good scalp on a small time frame. So slight miss. Okay. Here's the thing. It's a mixed bag. I don't know if you caught it. And by the way, that was provided by TradeTheNews.com. Last month was revised up. Wait, no, it's revised down. Prior revised higher is what it says. But it says 241 from 251. That actually might be lower. Small businesses. Just looking at it. Medium-sized businesses actually were the big hires this month. I don't have construction or manufacturing data yet as far as the subcomponents of ADP. But anyways, that's 10 months in a row we've had more than 200,000 jobs and very little reaction in the marketplace. Okay. There is a concern though, right? Doesn't it feel like the economy is slowing down a little bit? Right? Preliminary GDP wasn't as good as expected, so on and so forth. All right, look, 213,000 on ADP. That's not bad. 10th month in a row over 200,000. Well, that's not bad. But 213 is the worst since September. Okay. Cool, but very little reaction in the marketplace. That's surprising, actually. ADP has been a pretty good scalping opportunity over the last few years. It hasn't always been that case, and maybe things have changed again. We went from no correlation with ADP. That's why I always call ADP another dumb prediction, because people used to use it to predict non-farm payrolls. And it had no correlation, positive or negative. And then I think over the last couple of years, it had such a positive correlation that I suppose it didn't matter. People are still just going to wait for non-farm payrolls. So, all right, cool. It's Wednesday. What's the other thing that you should be trading on a Wednesday? Crude oil? Kitty cat? Fine. All right, so let's take a look at it. On the 4-hour, we are currently set at the monthly central pivot point, fairly close to the weekly M1, which is a conservative bearish target. Oscillators oversold and trying to rise. Signals to me reasonable potential that at 10:30 in the morning Eastern time today, we are going to find out there's more oil than we need, which means a build up in inventories. Or which would weaken the Canadian dollar, or the US dollar gets strong relative to the Canadian dollar. One way or the other, it seems to me we're oversold at support. Okay, so Kitty Cat is a great one to trade on Wednesdays because of that. Again, the Department of Energy releases oil inventory reports at 10:30 in the morning on Wednesday. So if you're a commodities trader, you will be trading oil today and watching that number very closely. Expect a good close today as well. What is that, 2:30, right? Is that right? Pigs and cows at 2, oil at 2:30? Anyone confirm that? I used to trade the oil close all the time when I was a commodities trading advisor, but no longer do I trade it that way. I think binaries are just probably a better way than futures contracts. So anyways, yeah, oil inventory. We're through the weekly, using weekly pivots now as support. How dramatic is that? I guess if you did the calculations, that's probably pretty close to weekly R3. I don't use weekly R3. Okay. Yeah, or monthly R1, which I suppose makes sense. Okay, so it seems to me the market has turned bullish. As an analyst now, I would mark the previous high in case we come back and retest it. I probably want a long. The other thing that I'm paying attention to is the 21 EMA. Okay, the 21 EMA is here now. Okay, in 12 hours, is it going to be there? No. In fact, even if price comes down, it's still going to go up because it's still measuring the last 21 candles. So it's probably going to be near here. Then 24 hours from now, it'll probably be here. So be very interesting to see what happens if oil continues up. It's going to go like that. Okay, for oil to go up, you're going to need a drawdown in oil inventories. Okay, a drawdown. That means the economy expanded at a faster rate than supply for oil increased, right? I'm not quite ready for that, so maybe we come down here today. Oil, there's a buildup in oil. This thing comes down like this, then pops up, makes a lower high, comes down here, and then we'll continue mission. And and then the oscillator would look like that. Okay, for that to happen, we need a buildup of inventories, a drop in prices, a drop in the Canadian dollar, and who knows, maybe the stock market will have already rallied and pulled the US dollar with it. USD CAD again goes up to the next level. What do you feel about that? So we've mixed multiple time frames, couple of currencies, and some intermarket analysis. Interesting, isn't it? So, peace on earth. May the pip be with you. May your profits be above average. Thank you for being a client of Trader's Way. We do these because we care about you and want you to succeed and trade profitably for years to come. If you want to keep these events happening, fund your account with real money. Justin, that wouldn't be long. You guys going to be here tomorrow? Justin, it probably has to do with the time of the month and stuff like that when they send those out. Cool, guys. Yeah. Yeah, thank you for being on my team. I hope these sessions help. And I'm happy that you're asking lots of questions and stuff like that. Good. Yeah, and the price is right, isn't it? Yeah. Well, again, keep a good thing going by funding your live account. We'll keep doing this together. So once again, the world really needs it. So I'll say it again. Peace on earth. May the pips be with you. May our profits be above average. See you tomorrow.